Welcome back to Investing Talk Podcast.
Today we're looking at OKLO.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, where do we start? Because if you've been watching the advanced nuclear space at all, volatility doesn't even begin to cover what's happened with OKLO.
Right. It's less a stock and more a pure speculative play. It's all driven by the excitement around small modular reactors, SMRs.
And you're basically paying a price for being an early mover in, what could be a really disruptive technology.
That's the perfect way to frame it,
Yeah.
is the cost of admission. We saw that first hook back in September when investor excitement, just excitement alone, sent shares up 50%.
And this was while they were still completely pre-revenue. Right?
Exactly. The market was just buying the vision, the story.
But September was really just the warm-up act. October was just wild, a spectacular ride.
It really was. We saw it hit an all-time high of, what was it, $193.84 on October 15th.
$193.
Yeah. And that surge, that was a staggering 700% jump in a really short time.
Which briefly pushed the market cap to $25 billion.
$25 billion. Just think about that for a second. For a company that's only just now starting to see its first commercial revenue, it was pure optimism.
Yeah, that kind of valuation wasn't based on anything financial happening right now. It was betting on, decades of growth happening in 1 week?
Precisely. And, what goes up that fast?
It's got to come down. And it did. The correction in late October and into November was pretty sharp. So was that just investors taking those, crazy 700% gains off the table?
That was a big part of it, for sure. You have to lock in gains like that. But it was also compounded by some deeper scrutiny from the market. People started asking hard questions about the timeline. Advanced nuclear projects have long lead times. There are huge regulatory hurdles. The market woke up and realized turning that $25 billion promise into actual assets was going to take years.
And then November gave us this really mixed bag of news that just threw fuel on the fire.
It really did. On one hand, you had this very positive signal, the expanded collaboration with Idaho National Laboratory.
Right, for advanced fuels and materials. That signals real technical progress, government backing.
A strong technical signal, yeah.
Yeah.
But the market just blew right past it when the Q3 earnings report dropped.
Oh, the earnings.
They reported a bigger loss than anyone expected. EPS came in at negative 20 cents, which missed the forecast by over 53%.
53%, wow.
And that just triggered an immediate sell-off. For a company that's basically pre-revenue, every single dollar of loss is put under a microscope.
And that loss is, it's pretty scary when you see the trailing 12-month net loss is around $76.5 million. But this isn't a normal startup, is it? We have to look at the burn rate versus the cash on hand.
Exactly. And this is the crucial counterpoint. That loss is significant, yes. But you have to look at the balance sheet. OKLO is sitting on a remarkably strong cash position of $683 million.
$683 million in cash. Okay, so that's the big mitigating factor here.
It's everything. For a company in a capital-intensive sector like this, with long project cycles, that cash translates to one thing: runway.
So they can cover their operating burn for a long time.
For the foreseeable future, yeah. It means they don't need to rush into dilutive financing. Plus, they have almost no debt, which puts them in a great position compared to some of their peers.
So that liquidity makes the loss feel a lot less alarming. And we are finally starting to see the first signs of commercial operations.
This is the positive pivot we were all waiting for. Q3 revenue was $3.64 million.
Which, okay, it's not a huge number on its own.
No, but it's a huge psychological signal. It validates the business model. It marks that transition to actual commercial operations, and it represents something like 1,100% year-to-date revenue growth.
Yeah.
It's a start.
A very strong start. So revenue is coming in even while they're still in that heavy investment phase.
Right, and the analysts are watching this. The consensus forecasts are for those EPS losses to narrow pretty significantly, from around negative 60 cents this year to negative 38 cents in 2026.
So there's a clear path to improvement.
There is. They're tracking toward it.
Okay, so let's move beyond the financials for a minute. The real justification for the premium valuation for all this excitement is the tech itself, the competitive moat.
The tech is everything. But in nuclear is more than that. The regulatory position is almost more valuable than the initial idea.
And this is where it gets really interesting, right? Their regulatory edge.
It is. They've already achieved a key regulatory milestone for their main Aurora SMR design.
Which most of their peers haven't managed to do.
Exactly. That kind of formal validation from regulators is a massive differentiator. It de-risks the project significantly.
And that progress, combined with their partnerships, really cements that first mover advantage.
Right. We're seeing commitments from the U.S. government for pilot deployments, which is critical for scaling, and we're seeing contracts with industrial clients. That builds customer stickiness for decades.
You also can't forget the IP, the intellectual property around the modular design. They're not just trying to join a market, they are kind of writing the playbook for it.
So if we bring all that back to the market today, the stock is currently trading around $97.57.
After that huge spike and the fall, what's the technical picture look like now? Is the chart broken, or is there still long-term support?
It's a really nuanced picture. The long-term structure is actually still bullish.
How?
The price is still trading above both its 100-day and 200-day moving averages. And those are key indicators of, long-term institutional commitment. As long as it stays above those levels, it suggests the big money still believes in the story.
Okay, so long-term confidence is there. What about the here and now?
Short term, the volatility is still rated as very high. It's at 14.85%.
Which means?
It means sharp double-digit moves on any piece of news or even a rumor are still the norm. This is absolutely not a stock for the faint of heart. It's a pure catalyst-driven play.
But that volatility isn't scaring off the analysts.
Not at all. Analyst support is really strong. The consensus is a buy, with about 38% calling it a strong buy, and the price targets go up to $175.
And we're seeing big names like Barclays and Goldman Sachs with targets of, what, 146 and 117?
Yep. So they're signaling a lot of potential upside once these catalysts start to hit.
Okay, before we get to the catalysts, let's just hammer home the risks again, even with that huge cash buffer.
The two main risks haven't changed. First, it's that heavy reliance on future regulatory approvals. Any delay is going to hit the valuation hard.
And second,
the persistent negative cash flow. That cash buffer buys them time, but eventually they have to start moving toward profitability to sustain growth.
All right, let's pivot to the near future then. The next 3 months look absolutely critical.
They're stacked with events, yeah. December is really important for two reasons: institutional movement and technical validation.
Okay, walk us through it.
First, on December 10th, we have the ETF index rebalancing.
So potential inclusion in clean energy or tech ETFs?
Exactly. And if OKLO gets included, those fund managers are forced to buy the stock, which creates this steady, non-speculative buying pressure, real tailwind.
And then later in the month?
December 24th, we get the year-end technology update. Everyone is going to be digging through that report for any signs of progress on the Aurora Powerhouse project. Any hint of accelerated development would be huge.
Then we move into the new year. January and February are about financial transparency.
Right. January 15th, we get the 13F filings.
And just for our audience, those filings show which big institutions, which big hedge funds, were buying or selling the stock in the last quarter.
It's a huge signal of long-term confidence. But the main event will be the Q4 earnings and the 2026 strategic outlook. We're expecting those around January 30th or maybe February 28th.
And that's where we'll be looking for new partnerships, regulatory wins, a clearer path to revenue.
That's the one to watch.
But because this is such a speculative name, we have to talk about the rumors, the things that can send this stock vertical overnight.
And right now, the market is rewarding any company that can help solve the massive energy crunch we're seeing from the digital economy.
Which brings us to the biggest rumor out there, the talk of a long-term power purchase agreement, a PPA with a major data center or an AI company.
And a PPA, to be clear, is a long-term contract to buy all the energy a plant produces. It would immediately validate the entire business model.
Secure, predictable revenue for years to come.
And it makes perfect sense. AI and data centers need huge amounts of reliable, carbon-free power. OKLO's microreactors are, like, a perfect solution for that. We're also hearing some chatter about new Department of Energy grants.
So let's wrap this up. We have this volatile mix of breakthrough tech, a ton of cash, and a whole stack of catalysts right around the corner. What's the final thesis here?
The thesis is still highly bullish. I'd keep it at an 8 out of 10 rating. The combination of disruptive tech, that first bit of revenue coming in, the huge liquidity, and all those near-term catalysts. It's a compelling story.
And it seems attractive for two totally different kinds of investors.
Exactly. You have the short-term traders who can play the catalyst events, like the ETF inclusion or a surprise regulatory approval.
And then you have the long-term investors.
For them, it's a way to get exposure to the massive structural shift happening in clean energy, and they're protected by that huge cash buffer, which just buys the company time to get it right.
So here's a final thought to leave you with. For a company with this kind of volatility, where its valuation currently rests more on future promise than current profit, how significant is the rumor of a partnership with a major AI or data center company, given their rapidly accelerating energy needs?